He's Greece's boss of the Debt Management Office, Petros Christodoulou. Thank you so much, sir, for joining us. We do appreciate it. And I want to start by asking you about Greek bonds, which have suffered a sharp sell-off on Tuesday. There still seems to be a great deal of concern out there about sovereign debt in your country.
Well, we're doing everything we can from our end to calm the markets down. We are doing the best we can to fund early, to reduce the uncertainty surrounding our market, and to be early in the market to prevent any sort of last-minute sort of perceived attempts to fund, et cetera, et cetera. So I think from our end, we're doing the best we can.
Sure, but despite your efforts, borrowing costs are still very high, aren't they? And that's even after the European Union produced a financial aid plan in conjunction with the IMF.
Well, let's admit that this plan, as was correctly stated before, this is a good backstop facility, if you like, a fallback plan. This is not a plan that's intended to be used from day one. And quite honestly, as our Prime Minister and our Minister of Finance has explicitly stated, our intention is to eventually not have to rely on this and to continue our course on our own. And eventually prove to the markets that we can sort out our public finances, we can contain costs, reduce costs, and we can raise our tax revenue. So you appreciate that this is a medium to long-term process. This is not something that is going to sort of show results in the first week or two.
Petros, I'd like to nail you down on some specifics. You said that you've got the financing for April in hand. How much precisely do you need to raise for May?
April is taken care of, as you correctly stated. We only have a recurring T-bill auction on the 13th and the 20th of April, which is the usual 3, 6, and 12-month T-bills, which we are doing every quarter. And there we have not announced what the size of that auction is going to be. But even not accounting for this, we have already pre-funded the whole of April. In May, we need about 11.6.
11.6. And when you do that, are you going to be looking at maybe selling yen or dollar bonds?
Well, 11.6 is the funding need for May. You appreciate that at the second half of April, we will be on a roadshow in the US and potentially Asia. Soon after that, could be end of April, could be very beginning of May, we'll be in the market with a global bond deal in dollars.
Analysts that we've spoken to say that Greek spreads are likely to stay where they are for now. What do you consider, in your opinion, to be a reasonable spread or yield for Greece? What would you be happy with?
Well, you appreciate I don't expect things to happen from one day to the next. We are trading well over 300 over bunds in the 10-year area. About 327 over bunds we closed yesterday. I would expect in the interim sometime in the summer, towards the end of the summer, to be around 250, and if you like, be in third quarter and fourth quarter around the low 200 mark.
But when are we likely to see those spreads start to tighten?
Well, now you're asking me to make a forward-looking statement on the markets, and that's very difficult for me to do. Like I said, the image we showed to the market eventually comprises two things. First, our funding strategy, and we're doing the best there to, as I said before, to pre-fund and not to surprise the markets the last minute. B, the measures taken by the government, all the economic austerity package, this will need to be given some time to run its course. And that's why I would like to, the next sort of 2 or 3 months to come by, and so that people will start seeing that this administration is serious about the new measures put in place.
Let me just ask you about Monday's issue, that 7-year. It's trading lower than the issue price. Are you disappointed with the market reaction? Would you have thought that you should have actually been offering a premium on that one?
Well, I'll tell you quite honestly, this was a very targeted transaction. You appreciate the 7-year sector is not as a popular sector as the 3s, 5s, 10s, 15s. which obviously is addressed to far more people than the 7s. The 7th is a targeted transaction. It was placed nicely, sweetly to a targeted group of investors, and we're in and out of the market within 3 hours. And I think this is the best we could do. Obviously, I would have liked to have seen it sort of more stable and trading well. I think that we need to give it time, and things will stabilize. You appreciate it's also the holiday week in Greece and Europe, so you appreciate that activity is a bit light. And also it's quarter end, so again, new bonds might have a little bit of trouble finding firm hands over quarter end.
Well, I mean, given the lightness, given the fact that it's a holiday week, why did you decide to go ahead with the auction of the 12-year? I mean, that couldn't really have been called a success.
Well, if you excuse me, I think this is not an auction of a 12-year that was ever intended to be placed to end investors. This was a purely technical operation to take care of an abnormality in the market, given that that specific bond was trading very expensive, was on a continuous basis being failed on the delivery in the market. Major investment banks from abroad were complaining over the past sort of 11, 12 months that we had to do something about this bond, otherwise they would stop quoting it because there were continuous fails and it was trading at -10, -20% on the repo. So all we did was a technical operation addressed purely to the primary dealers to address a technical and persistent short in the market and purely smoothen out the curve. Nothing more, nothing less. This was never intended to be placed with investors.
Okay, I mean, just to return to the funding requirement for May, you mentioned the 11.6 billion that you need. You mentioned a global issue. Did you say that that was going to be in dollars?
Yes.
And then also, I just want to get another specific amount, just to be sure, for the entire year. What is the total of your funding costs for the rest of 2010?
Including June, we need 32 billion.
32 billion. Okay, now, how, you know...
Put it differently, after June... yeah, sorry.
Well, just, yeah, including June, 32 billion. So just how are you going to continue to entice investors when you have to be paying something like 6% for the cost of funding?
Well, let me tell you this, something that has not been, if you like, communicated enough, I guess, to the investors, and probably it's our fault too, is that we have the third longest maturity, average maturity debt in the Euroland, including the UK. First is the UK, second is Austria, and third is ourselves. So you appreciate that what we have done is we've addressed the longer end of the market. We did, ever since I took up this position, we've raised 10 and 7-year money. Obviously, this is the best way to convince the markets that we are not afraid of the markets. We're there. We are paying the price. This is the fair spread given our economic picture in the market at the moment. And as that picture sort of improves, we intend to obviously issue longer end debt once the spreads start coming in. But we have the luxury also to issue short-term debt, which we haven't touched yet. So you appreciate that this is something that first we needed to address the markets and tell them and convince them that we can raise long-term money, and we always have the option to raise short-term money.
The markets at this point in time don't seem to be convinced by that. It's not looking good. Greece's borrowing costs are exceeding those of Spain and Portugal as well as Germany. How much time are you going to give it? You keep emphasizing this point, but if you cannot raise the cash that you need from the markets, at what point are you going to resort to other means of getting that funding?
Well, simply, the first option is to pay a higher borrowing cost than we had originally anticipated. That's option one. And I continue to insist on the fact that we aim not to have to use the fallback position of the EU package. But of course, it does help to have that in place. It does calm the markets. It does address the issue of refinancing risk.
But at what point would you go to the EU then and tap them for aid?
We would go to the EU and tap for aid if we reach the level where, if on the condition that there is no access to the market, which is not the case now.
I've got one more sort of a
You appreciate that this was always the intention.
I just want to return to the maturities that you were talking about. You talked about how you haven't tapped the short end of the market and that you might go to the longer end of the market eventually. So which would be first? You're going to look at three years and then perhaps consider 15 years, or what?
I told you about the options we have. I am not going to make any statement about our strategy.
Tell me, have you seen any change in the investor base of people who are actually coming to buy the bonds in Greece?
Well, one thing I need to address here is that what we experienced in the first quarter is that a number of interbank players, the banks, reduced the limits on Greece, mainly fearing that there was an issue about potential restructuring or refinancing risk. Now that they know that the EU package is there, I think that now they have gotten the answer that there is no risk for potential restructuring. Now you will see slowly and steadily the nominal limits that have been applied to the banks will be replaced again by VAR limits, PVO1 limits, which means dealers will be more comfortable holding Greek positions. I think this is going to help.
If I could just ask you one final question, because you do have one of the toughest jobs in Europe right now, an uphill struggle. And of course, it's not just a question of what the EU and the IMF are offering. Your government is taking action to bring down its budget deficit, and you're facing a great deal of opposition to that. So still many obstacles ahead. Are you enjoying your job right now?
Well, it is a challenge.
Okay, short and sweet. Petros Christodoulou, head of Greece's Public Management Debt Agency, thank you so much for joining us. We do appreciate your time.